Good morning, Robert, Sean. Welcome, everybody. See who else we have. Thanks, Nathan. Carlos, Christopher. I am not exhausted. I have some kind of an infection. Well, I have like a sinus infection, and it's right in my eye. Just one eye, stinging, a little swollen. No, I don't. I hold on, folks. Could be. Well, do you know what it's called?
Good morning, or actually good afternoon, everybody. Good afternoon. Yeah, I think this is one of those times you're overcomplicating it, Matt. But let me just put how to add two ticker symbols to TradingView,
I did.
and you couldn't find it,
Well,
eh?
maybe I used the word overlay. Maybe that was the
Yeah, I
problem.
think that I think that's the problem. You used the word overlay. You used the word overlay. Just put like multiple tickers on one chart. Hey, Brian, Helen, Richard, Omar. Actually, I look tired. I gotta get a haircut. I'll look normal again. We got Ken. We got Rosalind. Sam, where was the Albie S alert being posted? My name is not. There's no Sam's here, Rosalind. Who's Sam? Who is Sam? I want to know who Sam is. Are you cheating on me, Rosalind? Are you cheating on me with Sam? Hey, Timothy, Joy, Ron, Jill, Thomas, Nathan, Jesse, Lori. Zoom is still set on host and panelists. Yeah, can you go ahead and change that, Matt?
I, I asked I asked already.
And
They
yes.
said she said she would look at it.
Oh, okay. So they haven't done it yet. You'll have to do it manually, guys. For anybody who, but thank you for reminding me, folks. Switch when you're posting something, switch from host and panelists to everyone, okay? That's the little blue thing that's above type the message here. Just switch it from host and panelists to everyone, okay? Genevieve, Tara, Ruthie, Merv, Donald, Gus, Ivano, Christopher, we've all been getting here. Oh yes, the market's been giving us all haircuts. No, I'm actually getting a real. I need a haircut. Like I am desperate in a desperate need for a haircut. Robert, good morning again. Robert, Brendan. It is a hump day, isn't it? Sam, I am. Hey Gary, how are you? Leslie, iPhone, Liberty. Uh, uh, yeah, haircut like the market. Yeah, Matt used paper cloth after a. Oh, all right, that's for him. Sam Helm, see his post above. Sam, I don't see Sam's post. Maybe I missed some. Um, LVL 2 now. I could do spreads. Yee! Good, Sean. Ron, SB. Good, SB. Philip, Steven, Phil, Kimberly. Scott says 67% on AbbVie yesterday. Good, good, good. Kimberly, Kathy, Bob, Maggie, Carlos. That's true. That's true. That's very true. That's good. True, Carlos. You're right. You're right. Catherine, not a lot, but yeah, some. Well, if you stayed in that AbbVie, it was pretty good. Holding AbbVie overnight made me $1,000 more. Well, isn't that great, Chaltman? Go ahead and post that, Matt. I told you it's a good swing trade. Carlos says, love the AZP. Yeah, I've been getting tons of testimonials about the AZP. It's just this market's crap. I was looking at, so to give you some idea, let me give you some idea, folks. This is no excuses, but I want you to hear this. I was looking at a straddle. I was looking at a straddle. You're welcome, HG. Um, I was going to say it erases a lot of sins, but I haven't really been that sinful. I've been pretty good at keeping you guys out of trouble, actually, especially if you listen to me. And my crystal ball, the crystal ball, yes, the crystal ball. You look out of it, Matt. Are you feeling all right?
Yeah, well, my eye hurts pretty bad, but I don't feel super sick. It's
You
actually
you
just
you look worse than you feel,
it
basically.
actually feels like I got a good punch in the face right here.
Oh,
I got a good right
oh,
hand.
that means you got pressure
Yeah,
here.
it's a lot of pressure and a little dizzy still, but
Nice, Adam. You got to know when to hold them, and you got to know when to fold them. Let me repost this so people can you can post good or bad. I'm not trying to be secretive. That's why I'm asking everybody to post openly, so publicly, so everybody could see what everybody says. I've been able to hold my hands back because my money hasn't transferred. Jeanette, that's funny. Hope it wasn't Mike Tyson punch. Hey, Colleen. Hey, Tim. Glad everybody's here. So, a few things. Uh, wife punched you, Matt. Get his liberties.
got a good right hook.
Vertical. Good for you, Hefe. Good for you. It's very hard for me to read price action this morning. I don't know about you guys. Very hard. Hey, Peter. It was very easy yesterday. Let me share my screen real quick. Yesterday, take a look at this is the advanced decline line from yesterday. Look how smooth it is. And look at today. Very, 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 very difficult. Very, 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 very difficult. Very difficult. And volatility, we opened and then we haven't gone anywhere. So this is a very low probability trading environment. We have pretty much done nothing today. If you look at the SPY, you will see we opened, huffed and puffed, fake out high, fake out low, and we've been having an inside day. Now, um, something I want to break. So something I want to say. I was looking at straddles. I was looking at straddles. Wild Rangers, today's price action typical, not even close, Wild Ranger. Today's price action is probative of uncertainty. So, who said dog and heat? Absolutely right. Doug said, I agree with you, Doug. Vold is, see, you got to share stuff like this, Doug. This is good stuff. That's what Doug says. Publicly, posted publicly. Publicly. Okay. So a straddle on the SPY this morning was 13, 12, between 14 and $12. A straddle on the SPY in the morning is usually that expires the same day, $2, $3. You guys see the difference? 13, $14 versus $2. That's what we're talking about, a straddle right now. Big difference. Big difference. That trade that we did in Trading Zone, I don't know what we lost in it, like 10, 15%. That trade should have been a scratch or like 3% down in a normal market. Premiums are just like balloons, and then they go down intraday, and then they pick up again at night. Hey, Rebecca, good to see you. So I'm sharing my screen. Yes, I am. So, folks, this is the problem. We weren't able to recover any of this ground. We tried yesterday desperately. We tried the day before. Okay. Yeah, Gary, that's what I'm saying. And then the money, $7, when you multiply it times two, it's $14. Usually it's about $3, $2, $1.50, but not $7. Too expensive. Premium is too expensive. Folks, I'm going to say this again. We're in a Hurricane 5 storm. Do you guys know what a Hurricane 5 storm is? Do you go out to see how the weather is? No, you hide in the basement and you pray to God, right? This is a Hurricane 5. This is not a Hurricane 3. This is not a Hurricane 2. This is a Hurricane 5. What are you laughing at?
Like with a category 5, you don't even hide in the basement. You just leave,
Well, you know what I'm
which
saying.
is even more apt for this market.
Yeah, yeah. So I'm telling you, this is a Hurricane 5. This is not a Hurricane 2. We don't get them often. Last time we had one was during COVID. This is a Hurricane 5. So I'm trying to be as descriptive as possible with you. What do you do when there's a Hurricane 5? I get emails. Roger, I bought your Alpha Zone. I just can't make it work. I can't make it work. I'm like, well, maybe you should try it during any other time in the world except now. Like maybe, when the markets are semi-normal. And people have to, it's actually, they didn't say it wasn't working. They said it was a fast market. They didn't say it was working. They couldn't keep up with it. It was too fast. I said, well, Roger, I bought your Alpha Zone. I can't. Are you serious, Doug? Are you serious or are you joking? Okay, good. I thought you were joking. Good. Yeah. So, and they were saying it works. It's too fast, too fast. I'm like, well, Sam says I can't get enough of Alpha Zone yet. Good, 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 good. It's a really cool, very cool tool, especially if you use e-minis right now because they don't have the premiums on them and they don't have any decay on them. So he's like, it's too fast. I'm like, well, when the market moves, 2,000 points in a day, So anyway, you guys know what I'm saying. Just don't, again, my example of when you ask, this is a very good example. This is probably the best example of look at the big picture, look at the middle picture, look at the little picture. In this case, when you look at the big picture, you don't even have to get to the little picture. You're going around the restaurant. Does anybody live? Well, I don't want to say anything. I don't want to say that. That can be hurtful to people. Let me give you a good analogy. A good analogy. You're an alcoholic and you're in recovery, okay? And you're driving around the park, okay? Every day. But today, you're driving around like the area in the city that's all bars. Everything is a bar, and it smells like alcohol. It's like the strip of your city. It's 3 o'clock in the morning, and everybody's stumbling drunk, and they're walking around with alcohol. You shouldn't be driving around there. That's where the market is right now. You're in danger zone. Stay inside. Get under covers. Watch TV. Do anything except trade right now. This is not the time. You don't have an edge. Unless you're selling naked premium, you don't have an edge. Notice how few trades I've been giving in, even watch list alerts. Notice how few trades I've been giving in the watch list alerts. Don't trade options till premium. So trade and yes, exactly, George. He's saying the same thing I'm telling you. Don't do it. Oh, it's going to give you, yeah, of course. Well, you'll be able to buy options cheap, normal price. Yeah, yeah, we've been doing all good and fine. Those are good trades. Those are great trades. But I'm telling you right now, everything is very up, down. Forget it. Stop the Gitano. Stop the impeach. Don't do that. Don't do that. Be constructive. If you're going to say something, be constructive. What is the watch list alert? Watch list alerts is what I post all day long and give you guys here in the VIP room. I actually have one, two, three, four, five, six today. So seriously, don't like I'm going to get a haircut a little later today. Like use this as an opportunity to think don't think this market is your typical market. This is your typical market right here. This is your typical market, not this, not this, where volatility is 3 times the norm. But let me just say this. You see how let me pull up my TC 2000. It's easier to show you TC 2000. Gitano, don't. I don't really. I know a lot of people believe that I talk politics, but I don't. I don't really go deep into any of it. I just talk about it as far as it impacts the financial markets, and that's it. So here we're looking at SPY. Yeah, I know, Robert. I hear you. I hear you. They're very nervous, Murph. That's exactly right. They're nervous, so they're trying to hedge both sides. See, the market makers don't know where the markets are going to go more than ever right now. So they make the bull side expensive and they make the bear side expensive. So whichever way you go, they make money. You see, we don't want to be in that. So this is the problem I am having. I'm gonna make it bigger. And by the way, you don't tell me that I'm curve fitting. I told you this morning. You can rewatch the tape if you want. Right here. Remember, I said I don't want the meat of the move to trade within this area, and it's trading right now right within this area. I'm hoping it won't continue filling this area, and it'll continue going to the 8 day. Problem is, you still have the 8 day, and you have a hell of a lot of resistance here. And when I say you have a hell of a lot of resistance here, I mean you got some real strong resistance right there. Real strong resistance. So there's two ways this can go. Come back down here or just come right back up. And right now I have no idea. One thing I will tell you, I'll tell you why I believe the market, cataract surgery. Good luck, Ken. Good luck. Good luck to you. Good luck. Is Mumu? I've never heard of them before, Mercy. I've never heard, I don't even know what that is. Good luck, Ken. So I don't like this. I don't like this. What I do like is this. IWM did not break the low after it opened today. It went right to it, but it didn't break it. Very, very important. Yeah, good luck, Ken. Good luck. Please keep us all posted. So that this didn't break the low. I'll tell you what I think. What I believe. I'll tell you what I believe. I believe the reason why the market are two-sided today is because there's a major divergence between China, Europe, and Japan. This morning, China was not down. Japan and Europe were down over 2%. Please correct me if I'm wrong. Somewhere in that neighborhood. They were down substantially. So I believe we're seeing this divergence because we are not because markets are being driven by global economy. We're trying to assess how the U.S. economy is going to react to all of these tariffs. We really still, to this day, do not know what the plan with the tariffs is. So we can't really make heads or tails because we don't know if Trump is going road one or road two. If you don't know what I'm talking about, I'm not going to get into it again today. Please review my video from yesterday. But all of this kind of helps me figure out where we're at right now. And right now, we have a lot of non-directional volatility. So to me, it seems like the markets have absolutely no idea what they are doing. Okay? Absolutely no idea what they are doing right now. There's no clear trend to the market. There's no clear trend in the market. There's no clear. Hey, Patrick from Hawaii, how are you? Mike, Just, Jen, and Fred. There's no Ed, Colleen, everybody. Tim, Samson. Good. Hello, guys. So again, my feeling is we are still in a wait and see mode. Yes, what Merv just said, waiting for the tariff deals to get. That's exactly it. That's where we have. Look, we have a hole right now, and the hole's about this big. The hole was this big. Now it's this big. The hole still has all this to fill. Once the hole gets to a manageable size, the markets will start going beyond that because we'll have to start having some certainty. But we can't have that. In other words, Trump can still say something and markets can just drop like this, or he could say something and the markets can go up in a month or so. And again, that month that I just said, it could be the next 3 days. It could be the next 24 hours. I'm thinking it won't be longer than a month because nobody's going to be able to tolerate these type of markets. So I'm thinking over the next couple of weeks, maybe less, maybe more, but probably over the next couple of weeks, we'll start getting and maybe a lot less. Maybe I'm hoping a lot less. We're going to start getting a real good feel for where we're at. Okay, we're going to get a really good feel for where we're at. We don't have that right now. Yes, Wade, we need some certainty. I know somebody's been saying that since December, I think, or January. This one guy's been saying it. We need some certainty, and we don't have it. All right. I'm doing well, Art. Welcome, and I hope Magic Mountain's doing all right. Yes, right now, unfortunately, it's up to the president because tariffs are so darn important. Okay. So again, all right. Let me answer some questions that I've been getting, and I want to make sure you guys have all this information. Second. Okay. JB, did you hear, let me ask you, I've been talking for 20 minutes. Okay, so I've been talking for 20 minutes. Did you hear me say anything about, first of all, please post so everybody could see your question. This is an open forum. Have you guys heard me use the word capitulation in the last 20 minutes? Did you hear me say anything about capitulation? Okay. Just want to make sure I didn't say. If you don't hear me say the word capitulation, why would you think we were going to have a capitulation? There's not even what Carlos just says, not even close. We're nowhere near a capitulation. There's not one side, not one thing that's telling me we're going to capitulate. No, no, no. I'm not going to tell you what you want to hear. I'm going to tell you the truth. No, the answer is no. No, what I'm seeing is a base being built where the lows are getting a little lower, where we may go off the cliff. That's what I'm seeing. Doug says, Doug, can you please post this for everyone to see? All you have to do is go everyone instead of host and panelist. Let's say the tariffs are resolved. Everyone was talking about needing a pullback. Now that they're getting a pullback, when it does reverse, can we expect another bull run? Uh, Doug, I think you're oversimplifying things. I think you're oversimplifying things, and I think that you want me to predict the future. The answer is no. We do one step at a time. And if anybody tells you they know what's going to happen, they're lying to you. Okay? Only Kramer can answer that. You know what? I know two people who can answer that question for you, Doug, really accurately. Kramer and Kathy Woods. I can't answer that question for you. I'm not qualified enough. If you haven't figured it out yet, Doug, nobody can time the market beyond a very short period of time because there are too many variables involved. But I do know two people who are pretty good at it, Kramer and Kathy Woods. They're much better. They're much better at it than I am. Yeah, okay. I was hoping you guys would get a kick out of it. But Doug, my win rate has been 90, close to 95%. I don't know. We'll see what happens. What do you care what's going to happen after tariffs? Why not just trade the tariffs and just wait and see what happens? Don't plan ahead. Life is too unpredictable. Or listen to Kathy Woods. Okay, so let me give you answers to questions that you want to ask, but you haven't figured them out yet. Okay. Okay. How to determine if you're overpaying for an option premium? Roger, I've never known you to be a liar. Don't say that. All right, I won't. There's one guy in Bloomberg this morning whose short position made over 500 in one day. And like you see, this is a great example of nonsense. Look what Steve just wrote. There's a guy on Bloomberg who's Steve, I had a trade last December and it made like 5,000%. And what does it have to do with anything? It doesn't mean anything. See, that doesn't mean anything. Tell me this. I want to see a guy on Bloomberg who had 350 trades and he was right on 95% of them, not how many he made on one trade. That's what I want to know. It means nothing. That's like the guy who goes to Vegas and bets $5 and wins $3,000. That means nothing. That doesn't mean anything. It's meaningless. It's you can't take anything from that other than don't repeat what he's doing because he could have lost 500%. Okay? Listen, think, listen to you're here for a reason. I'm trying to help you get rid of those stupid habits. Those the guy who made the 500% on Bloomberg habits. Can we get on with the class? No, I'm teaching you a very important principle. I'm going to get on with the class when I want to get on with the class. Yes, I'm trying to get people to stop saying stupid things. That's part of this class. Part of this class is getting people to stop saying stupid things. Okay. So, how do you determine if you're overpaying for option premium? How do you know? Can anybody answer that question? Can anybody tell me? No, not wide spreads. Creative, not bad. What about implied volatility? What about Bollinger width? You guys, yes. No, no, no. You keep saying implied volatility. What about implied volatility? How do you know if, okay, so how do you know if it's high implied volatility? Wait a minute, wait a minute. How do you know if it's high implied volatility? I'll go with you guys. How do you know if it's implied volatility high? How do you know implied volatility is high? Kent says over 20%. VIX, Bollinger Band width, more than 80% difference in, no, the spread means nothing. Okay, compared to normal implied volatility. No, you compare it to historic volatility, but I get what you guys are saying. All right. A lot of you are right. A lot of you are wrong. First of all, don't just say high implied volatility because my next question would be, well, how do you know it's high implied volatility? Sometimes stocks have high implied volatility all the time. So I'll explain to you several different ways. There's two different ways that work really well. And it all goes back to what I showed you previously. So let me show you. Got to have some fun with you guys here too, right? So let's take Z, stock on my watch list right now. Okay. This is the 8-day EMA. This is the price. How deviated is the stock from an 8-day EMA? Dave, here's a replay. If you want to laugh some more and watch the replay, here you go. See, it's got empty space between the red line and price. This has no space. This has a lot of space, right? Check mark 1. You start using your eyes. Stop depending on data and start using your eyes. Then we go Bollinger width. Oh, what's the average here? 4, 5, 6. Where are you right now? 16. And lastly, sorry about that. VIX. VIX above 20. I just showed you 3 ways to see if a stock's implied volatility is high without comparing historic volatility to implied volatility. Anybody have any questions? Thank you, Michael. Does anybody have any questions? You want me to say it again? Okay, let's pick another stock. How about Pfizer? Yeah, no problem. Looking at this, you can't tell. Where's the 8-day EMA? Where's price? This is price being near the 8-day EMA, right? This is price being near the 8-day EMA. It's hugging the 8-day EMA. Where is the 8-day EMA compared to price? I'm doing it, Stacy. I'm showing it to you. And then Bollinger width. Whew, look at this baby. Here's the average, right? Doesn't have to, you don't have to pick the lowest level. Just, an area where the bottom hits 70% of the time. Give yourself a little room. Not 5.6. Volatility is right now almost 3 times higher than it should be. And then looking at the VIX. Do you guys got it? What's wrong with historic volatility? A lot of people are lazy, George. They don't want to bother, and they don't know how to find it, or they don't want to find it. Mike, the problem is if you look at, okay, all right, let me ask you guys a question. What's the problem of using volatility rank and comparing historic volatility to implied volatility? What's the downside there? What's the downside? Mike Bernard, the man who said, look at implied volatility rank to see where it's relative to last year, which is not a bad idea, by the way. I'm just being really picky right now. What's the downside there? The rank is against the stock itself. That's absolutely right. I'll give you the answers. Boyd, stop it with the politics, please. Because what if the historic volatility on the stock is unusually high? What if the stock has high volatility? Let me give you a good example of that. Mike, let me give you a really good example of that. AVGO. AVGO usually has high implied volatility. So it's very hard to gauge. Just did my third scalp today in SPY. Brett, share the wealth here. Let me, you love that. The people love that AZP. They love it. I knew you would. So again, the problem is you're still comparing the stock against itself, and the stock can just have high implied volatility, especially if it's a high flyer NASDAQ stock. Okay. Do you see the problem, Bernard? Actually, sorry, Mike, not Bernard. I didn't mean to call you by your last name. Mike, do you understand the problem? You're still limited by you're still looking at the stock itself. And if that stock has high implied volatility, it's a problem. It's a problem. So you can do that. And it's not, a lot of people do that. A lot of people do that. But here's the problem. Here's the other problem, Mike. And this is what people don't take into account. My job is to show you what all the problems are, not to give you solutions. My trouble is just my job is to make life harder for you guys. I'm the guy that always shows you more trouble. I'm not the guy that comes with the solutions, right? So here's the other problem. Let me give you an analogy. Right now, Mike Bernard, right now, and I'm not picking on you, just you gave a good answer. Look at implied rank and see where it is relative to last year. So let me give you an example. Right now, volatility on the market is 3 times higher than it usually is. Right? Right? Just say yes or no. I want to make sure you guys are following me. Okay. So are stocks in the children of the ocean 3 times more volatile? In other words, are regular stocks more volatile by 3 times than they usually are? Yeah, look, 2 versus 6. Okay. So Michael, here's the problem. You said let's say that we look at your favorite stock exactly a year from right now. And by the way, I'm not picking on you. There was nothing wrong with your answer. It's a great answer. That's what 95% of traders would say. Compare historic with implied. I even said it. There's nothing wrong with this. But look at the problem. A year from now, we look at historic volatility. Okay? Good. Right? Let's say you look a year from now at historic volatility on this stock, on Pfizer. A year from now, assuming that, this problem is behind us, this whole tariff is behind us, a year from now, you're going to look at Pfizer's volatility and you're going to compare it to current volatility. And if you do that, the odds are your historic volatility is going to be 3 times higher than the volatility a year from now on Pfizer because of when you're looking. Similarly, let me give you an analogy, okay? Remember the promo for Pro Trader Dashboard? There was a very interesting slide in there, and I want to bring this up, and I'm not trying to sell the Pro Trader Dashboard for you. There's a lesson here, okay? There's a lesson. It doesn't matter. He gave a perfect example. I would not look back a year, but maybe 30, 45 days. George, what if I would actually look back a year? I actually would look back 90 days, 6 months, but it doesn't matter. Let me explain to you the problem with all of this. There's nothing wrong with his answer. It just raised some good questions. So let me give you a good analogy. Okay, we gave a slide on this because I wanted. Why do we use relative volume in the Pro Trader dashboard? Remember the slide that said, and I did this an hour ago. That's why I remember the presentation. I showed you a slide, and the slide said, "Look at the stock. The volume on a daily basis is going down, right? The volume in the market is going down. You know how the volume in the market was going down before New Year's? Well, because volume in the market was going down, volume in individual stocks was going down. Volatility rises in the market, volatility in individual stocks rises. Volatility goes down in individual stocks. Stocks are related. So if market volatility 45 days ago or a year ago, it doesn't matter when, that's not my point. If volatility during the period you're looking at historically was 3 times higher, you're not going to get an apples to apples example. Then it means you're going to have to check the market and find the period when the stock wasn't volatile. Well, why not just do this? Why not just go straight to the source? Why not just go straight to the source? That way you have something to look at here, at least a good baseline of price movement, not just implied volatility. So my point is, my I do too, Nathan, but my point is, if you're looking at the historic levels for a stock, you got to take into account if the market was during that time volatile or it had a lot of volume. It's like I'll get an email from somebody and they'll take a 90-day period and they'll say, "Look, Roger, during this period, 90-day period, none of your shorts made money." And I'll send back to them an email, market first, market first, market first. And I'll say, "Hey, I got a question for you. Have you looked at what the market was doing during this period of time?" And they'll be like, "Yeah, it was going straight up." I'm like, "Do you think I would be taking shorts this entire time while the market's going straight up?" Probably not. So, point is, always take into account, as Mike just said a year ago, always take into account what was the market doing a year ago. And I don't want to do that. So this example takes that away. I don't have to worry about any of that. I just have to pull this up or look at how far I'm away from the 8-day EMA. And that'll tell me immediately without looking at his. So the reason I don't like to look at hey, Jeffrey, there you are. The reason I don't
Hey,
like to compare historic volatility with implied volatility is because what if the time that I'm actually comparing it to, the market was quiet, or the market was loud, or the market was illiquid, or it was summer? So this way, I can just apples to oranges see how far am I away from the 8-day EMA, and how far am I away from historic mean as far as the Bollinger width is concerned. So just a real simple thing I wanted to answer. Okay. Second thing, Jeffrey, this is a good question. I'm going to ask them a question. I want to see if they know. Folks, I've been asking Jeffrey to come in. It's always good to have, when God forbid you have a disease, you want to go get a second opinion. It's always good to get a second opinion from another expert. And Jeffrey's an expert, so I wanted to have Jeffrey here to make sure that. Thank you. I wanted to have Jeffrey here to make sure that I'm not saying anything crazy, that we were kind of on the same page. Checks and balances system,
hey.
so to speak. All right, Jeffrey?
Yeah, we
So,
might all be crazy though.
and the setting I use for Bollinger, the standard setting is 22. I use 10.2. That's it, 10.2 right here. And you could get this free. You don't have to buy anything or download anything. Real simple. So, yeah, 10.2, that's it. So the other thing, and Jeffrey, what do you think is the single biggest factor that will determine whether the downside global trading action, basically, what's going to be the first indication of whether this craziness is going to end? What's going to be the first? First, can anybody? Let's see. First of all, let's see if anybody here knows. What's the asset? Just give the asset, folks. Anybody know? All right. Boy, I teach you guys really well. They know. No, G Nate, no. Oil.
You see, yeah, I have an interesting theory going on oil right now.
Tell me. I want to hear this.
I think if we break below 50, the
Yes.
Middle East starts a war.
Starts a, starts a war?
Yeah, they need higher prices.
Oh, they definitely need higher prices. Putin is not going to be in a good position if when you say, okay, When you say east, can you be a little more specific?
I'm you know, we sent 300,000. We, the United States, sent 300,000 troops over there this past weekend. We sent 2 carrier strike groups in the last 3 months. We sent a flight of B-2s over there in the last 2 weeks. And I I suspect, somewhere over there, Iran maybe,
Mm-hmm.
Houthis maybe, Yemen maybe.
Gotcha, gotcha.
We could shut down the entirety of Middle East oil production, at
Yeah.
least temporarily, and cause oil to go from 50 or below 50 all the way up to 90 to 100, maybe even a new high that we've haven't had since COVID. Um, it,
Oh,
it
I sure hope that
this
doesn't
is this
happen,
is
you know?
this is the shift in narrative that I see going on. Like mainstream media is focused on this tariff stuff. This other thing's going on in the background, and I think a dip below 50 on oil might be a catalyst to kick this thing off.
Very possible. I'm not the one to predict the future, but what I'm seeing right now is that energy's telling us right now that we could and again, I don't know what will happen in the future, but I do know that right now um the energy market is telling us that the global markets have a huge amount of uncertainty on their hands. And I've noticed if you look at most global turmoil type of situations, you will notice that energy, like COVID, energy prices were the first ones to go because obviously there's less demand for global economy. There's bigger when 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 you have inflation, fear of inflation, energy prices rise. But when you have a fear of a global turmoil like this, um, energy prices tend to be the most sensitive globally,
Yeah,
and globally they tend to sink. That's what I've in my research. That's what I've been able to find. But what
and
you're
big
saying is there
big
may be a change in there may be a change in the narrative. That's what you're saying.
yeah, yeah, big expensive wars. That burn a lot of fuel. That's good for
Wars are
oil
very
prices.
expensive. Wars are
Yeah.
very, very expensive. I mean, I'll tell you, that's like the last thing we need right now, you know? Like
Hey,
that's like the
hey,
last thing we need right now.
that's I think it's all, Trump said the quiet part out loud last week when he was on TV and said that he needs the interest rates lower so he can refinance $7 trillion of debt this year. And
Yes. Yes, he did,
he's
which
he's
is
trying
absolutely
to
true.
force he's trying to force Jerome Powell to cut rates. Now, is it
Yeah.
tariffs or is it war or is it something else that we haven't seen yet that forces him to cut the rates? So that's he's trying to force Jerome Powell's hand one way
He
or
sure
another.
is. He sure is. And Jerome Powell told him, "Go f yourself," pretty much in a nice way several times. Several times. Powell does not like to be pushed around,
Yeah.
especially by a guy who can't fire him. Um, so he doesn't have any control in firing him. Yeah, Powell reiterated, "We're not going to be doing that." So we'll see. So we'll see. We'll
Yeah.
see. We'll see what happens. We'll see what happens. But it is getting very, very interesting, and I completely agree with you. Foreign government has to buy our debt. We need to refinance our debts. Somebody needs to buy our debt, and we need interest rates to go lower, not higher, for that to happen. So it'll be very, very interesting to see. It'll be very, very, very interesting to see how that is going to play out. Who's going to buy U.S. debt? Whether Trump has alienated those parties or not. But um, his name is Jeffrey, not Nicholas. Just FYI. But I looked at TLT this morning before the open. It was down 3%. Right now, it's down 2.4%. And we all know this is not having a very good impact on, this is not having the impact we want. I mean, bonds go down, interest rates go straight up. So,
You able to pull
so,
up you pull up the US 10-year on there?
but yeah, sure, sure, of course.
The ticker I'm used to is US 10Y.
Yeah, 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 of course. Yeah. This correlation is very,
It took an immediate spill on the tariff, on Liberation Day, but then it's actually rallying to new highs. Um, yeah, that's the note, but it's I was actually talking about the interest rate for it. I
yeah, I
don't know
mean,
if you have it.
it's the opposite. Well,
Yeah,
tell me
inverse kind of, yeah.
which one you want me to look at here. You want me to look at the 2 year, the 5 year? I could look at any of these, but they're
I
all
was actually
going.
looking at the 10 years, the 10-year interest rate is what I was actually looking at.
Yeah,
The
which is
actual,
it's just inverse. It's inverse of
yeah,
this. Yeah, it's
inverse, yeah.
inverse of this. So if this goes straight down, interest rates go straight up.
Yep.
And interest rates have been going straight up. I mean, we are at the 50-day moving average, but interest rates for the last 3 days have been going straight up,
Yeah,
straight
we
up.
got
If
on the 10-year, we've got a 4.45, right now.
yeah,
And
yeah,
it's
it ain't.
it's
What was it?
almost about to break out. I'm afraid if we break out, we actually go to 6 on the 10-year.
I couldn't agree with you more. I could not agree with you more. And folks, that is a huge, 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 huge problem. Yeah, I
And
know Zoom.
what that's actually telling us is that there's no demand for these longer dated treasuries right now.
That's right. That's right. That's right. And that's not a great thing. That's not a great thing. And you'll also see that the correlation between them, you'll see that even if you go to the 2 year, uh, Zoom user, 10-year bonds, not 10-year bonds, the actual bonds, not the notes, not the futures. If you look at it even on a short-term basis, if you look at the 2 year, right
Yeah,
here.
2-year hasn't been reacting as violently, but it is grinding in there, not
Yeah,
really dropping.
yeah,
So
it's not. Yeah, I mean, it's not good. This is not good. It means there's a higher chance of a depression. The biggest factor in depression or recession depression is energy prices. Think about this. Think about this. If there's a slowdown in the economy, there's a huge slowdown in transports. Less people fly, less people take planes. There's less business activity, less people book. So there's less demand for energy.
yeah,
Yeah, I
and
always look at yeah,
Roger, our way to avoid accidentally getting in a recession or a depression is to start a war also.
absolutely. That's right. That's right. Very,
So I
very
mean,
good point.
these kind of things the puzzle pieces keep falling in. It's really scaring me right now, actually.
It's also, hey, I never thought about this, but it's also a way to deflect things.
Yep.
It's a great way to deflect things, right?
Yeah.
I mean, it's something to think about. But that's why I have Jeffrey here. See, folks, perspective. It's always good to have perspective. I'm not as
You know,
adventurous as Jeffrey, so this is good. This is very, very good.
something else that showed up this weekend that kind of caught my attention is they put the defensive fences back up around the White House this weekend.
Yeah, they did.
And
They did.
that's the mainstream media not really reporting on that, but something's going down, and it's probably not all this tariff rhetoric that's
No,
going on
no,
right now.
they wouldn't put a fence around for that. It's very
So
true. Listen, and I mean, I'd like to say implied volatility is high because of that, but markets seem to always price things in. Maybe there's something that we don't know. This is great perspective. Now, the problem with this perspective, it
but
won't change my view of the market, but
yeah,
it's a good perspective. It's a
well,
very, very good perspective.
you got to be aware of the unknown unknowns. That's the things that can reach out and get us. That's what causes the black swans in the market. If you're aware that something's cooking and you can be more defensive on your strategy for trading in markets, then just be carefree and oblivious to what might be going on.
Yeah, I couldn't agree with you more. Now let me ask you another question. This is actually someone just you're actually much better at Bitcoin than I am. That's your baby. I just look at it and how correlated it is to other assets. It's obviously very correlated to the mega caps right now. Do you think it's going to
Yeah.
remain correlated and the correlation is going to increase, or do you think it's going to decrease and it's going to start doing its own thing eventually?
So you had
I'm
up G.
talking specifically about Bitcoin.
Yeah, I was gonna say you had up GBTC. You might zoom out there a little bit and look at back where the March 2024 high was, and I think that's a very critical level. Um, when you, yeah, you'll have to pull that out just a little bit and look at that March 2024 high back there. On GBTC, we're actually dipping below it. On the spot bit market price, we're still a bit above it. I don't really
Right
want to see
here.
us, yeah, right
Right
in
here.
there. I don't really want to see a sustained move, much below that. I really want to hold this area right where we are. So if we don't, it doesn't look good for the long term on Bitcoin.
Yeah.
So,
No, no, I agree with you. Let me just go back real quick. Let me look at the long
the
term.
Magnificent Seven's already kind of below that. So,
Yeah, 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 yeah,
it's
yeah, yeah. Yeah. See, to me, right now, there's no major. Here, let me go back. For me, there's not really much here.
yeah. And we can
After,
go substantially lower
yeah, yeah, we
if
can
we
go
get below this.
right. Yeah. If we get below this, see, Jeffrey and I are seeing exactly the same thing. There's not much here, folks. So if we break this, we can, the next value area is like around here. Let me just put a little.
And in dollar and cents value on actual spot market Bitcoin, we're talking about like a dip down to like 50,000. From the current
That's,
80, 77 to
that
80,000
would
that we're
put us,
banging.
that would put us right in the middle of my box.
Yeah, somewhere
Or
right down in there. Yep.
thereabouts, but that we're talking about my box basically.
Yep.
So, Merv, Bitcoin is starting to become increasingly more and more assimilated with a mature asset, which means it's going to start trending more and more like the stock market. I don't think
Now,
about anything of any reset, any crash for Bitcoin. I'm not seeing any of that.
now, Roger,
Go
the
ahead, Jeffrey.
other thing about Bitcoin is um, a lot of people look at it as a credit default swap for fiat currency. Um,
Yeah,
and
more and
it,
more, more and more every
if
day.
Yeah, and when you look at it, it's like a one point, I don't know what it is today, 1.2 trillion, let's see, let me pull it up real quick I'll give you the exact number for today. Bitcoin hanging out at 1.5 trillion total market cap for all of Bitcoin. And the fiat currency, 150, 130, 150 trillion dollars
Right.
globally.
Yeah.
So
At
we're talking
least.
about a 10x potential. Um, well, that, maybe 100x potential on Bitcoin if it were to if fiat currency were to default. And we're seeing central banks all over having trouble, especially with this tariff rhetoric. I mean, it's just another risk out there. We're talking risks today. Another risk is some sort of fiat currency blowing out, especially one of the majors, and
Yeah.
that could have global implications that we almost
Very much so.
unfathomable for somebody like me.
Very much so. They can have multiple implications. It'll be, but it's very interesting. But yeah, but I do see in the short term, we're in this little area right here, and if we break this area, which we looks like we're breaking right now, we
We're
can.
definitely pushing. We're stressing it.
Yeah, we're definitely stressing it. We can easily go down to this area. There's a lot of stuff. Well, Jeffrey said 55. That's where this is. The high of this is 55. So that's definitely that. There's a lot of. This is a strong value area. There's a lot of value here. So, but right now
And
in this pocket, there isn't. We're
I
actually
see the
like getting in the game.
question. I see the question about Ethereum, and it has actually broken its long-term support the last 2 days below, basically below 1500. That sets it up to potentially go back to revisit the June 2022 lows down in the 800s or lower. So
Do you from a fundamental perspective, are you seeing Bitcoin continuing to strengthen, or are you starting to see more diversification into beyond the top three or four currencies like Ethereum and Bitcoin? Just I know
uh,
that the top three have been like very, very popular, but are we seeing
yeah,
more, or is it stabilizing?
right now we're seeing Bitcoin kind of pull away a little bit. We're seeing, you may have heard me say this years ago when we were doing the weekly show that I thought we would have a great altcoin shakeout where a lot of you know, now we're up to like 2.4 million cryptos. There's like 2.39999 million cryptos that are going to be completely worthless pretty much. And, just a handful that are going to have any actual true value or use in the world.
Right.
And, you know, I, I have a hard time playing around with anything other than the top coin
Smart.
right now.
Very, very, I think that's very, very smart. And I would do exactly the same as you because typically in these situations, the top two or three ends up like Ethereum, it doesn't have to be the Bitcoin, but the top three usually are the
Yeah.
ones.
And we
Uh,
might see some rotation. Ethereum may drop down and Solana or something else may come up and take number two spot. That'll be kind of a shocker for a lot of people, I think.
I think so
So,
too. I think so too. Last question for you about crypto. And I got this one wrong. I got this one dead wrong. I predicted that Amazon was going to come up with their own cryptocurrency a few years ago, and I was wrong about that. Do you think
yeah.
that's still going to happen, or do you think that's just a big rumor and it's just a pie in the sky?
I don't see the real use case for Amazon to develop their own currency unless we have some sort of fiat freakout. Like if dollar becomes a problem for global trade, then I could see Amazon coming up with their own currency that can be universal to their system. But as long as we're hanging out with, you know, no need to have some sort of alternate, then I don't see any need for that to happen.
Gotcha. And can
I don't
you
see any need
answer?
for Amazon to create their own.
Yeah, I got you. Okay. All right. Because, it's not, I'm not like, there was a lot of talk about it a few years ago. There was a lot of talk about Amazon coming up with their own and just never happened. This was about 7 years ago. So, what
Yeah.
are the top five? Can you list the top five right now?
Oh,
Somebody was asking the top five.
yeah. Hold on 1 second. I'll pop it up and tell you live what the top five
Thank
are.
you.
Let me clicked on the wrong book window, but I'll pop it up and the top five coins as of right this moment. You can go to coinmarketcap.com and find this out. Bitcoin number one, Ethereum number two, US Tether number three,
Tether. Yeah, Tether.
XRP is number four, and number five is Binance Coin.
I've heard of everyone except the fourth one. Never heard of that one.
Yeah, XRP, that's Ripple. You
Ripple.
may have
Oh,
heard of.
now I've heard of yes, I've heard of Ripple. Okay,
Yeah.
Beyonce and Ripple. Okay, that I've heard. That I've heard.
XRP is
I'm
the ticker. Ripple is
yeah,
the
yeah.
name.
I got you. I got you. I don't trade. I don't trade anything beyond Bitcoin ETFs. So my knowledge, like I say, when I tell people I'm not a crypto guy, Jeffrey's the crypto guy. I really do mean that. I'm not joking about that. That's just not my forte.
And that was
Well,
that was by
Jeffrey.
market cap.
Yes.
That was just by
Yeah,
market
of
cap.
course,
So
of course, of course. Mark says Amazon alternate coin might be like China trade with U.S. coin. Who knows? We will see. We will see. All right, folks, before we conclude, let me just give you the ticker symbols for my top stocks that I'm looking at. They're all to the short side. I don't have any stocks to the long side, but let me give you my stocks to the short side. And options, as I said, are very, very expensive and they're overvalued right now. So be careful. If you're going to do something, buy in the money options or just buy the stock or trade the stock. Zillow Group to the downside. A lot of uncertainty right now in the U.S. real estate market. APP, Applovian Group. Wait for this thing to break the 200-day moving average. It's got to break, but if it does, if it confirms this area here, this level, it's going to be a good one, I believe. And I was just about to ask you to post your YouTube channel. Thank you for doing that, Jeffrey. Thank you. And Pfizer, another one, especially with these potential tariffs that we're going to have here. It was a good session, wasn't it, folks? See, good to have a little perspective, right? STX, by the way, tech seems to be strong, but STX is not holding it. Weaker than the stocks in its sector today. By the way, they're all extended. So day trade, very short-term trade. Don't go crazy with these. Yeah, it's very good. Very, very nice. Very nice. We have 100 people here. We have 400. We have almost 600 people at one point here. Very good. Very good. Thank you, Joy. I appreciate that. STX, Citibank. Citibank doesn't look good. Doesn't look good right now. Goldman Sachs is another one that's not looking great. Not looking good
a lot
at
of financial
all.
earnings kicking off starting Friday. So
Friday. So we got to be, we got to be very, very careful with these. I was just, you took the words out of my mouth. EBR, not looking good at all. All right, folks. Thank you so much, Jeffrey, for being here. Folks, thank you so much for your session. I will see you tomorrow at 8 o'clock. Please click the link that Jeffrey posted so that you can join his YouTube channel. Jeffrey is Jeffrey and I have different styles of trading, but we respect the basics and we know how to read price action. That's the key. There is a recording to this. Yes, here it is. And if you guys want to hear it, check it out. Love having Jeffrey here. Always a good time. There is the link. And Jeffrey, thank you once again. I will see you next week. Folks, take care.
Always a pleasure.
Jeffrey, any parting thoughts for folks in this market environment?
And be careful out there. Nobody's going to watch out for your money more than you are. I promise you that. Even a financial advisor is just trying to make some of your money into some of theirs. So be careful, everybody. Be careful.
Be careful. Hurricane 5, guys. Hurricane 5. Don't be frisky right now. This is not a time to be frisky. All right? Thank you, Jeffrey. Thank you, Matt. I'll see you guys later. Bye, everyone.
Bye, everyone.
Have a great afternoon.